So y'all already know what's going on. Y'all already know what happened. Do I gotta say what else I gotta say? What else I gotta say? Y'all know what happened, right? Y'all should know what happened. What y'all think happened? Jarwell boy, you definitely for sure. So I'm not even gonna play with it now. So that was my first time ever experiencing that. So I know how to move accordingly going forward. So y'all already know what time it is when it comes to certain things. And to me, I feel like, I mean, damn, is that serious? You know what I'm saying? Is it that serious where you can't even talk about the banking system? But I'm not gonna cross any lines. But damn, you can't. So I must have been striking a chord. I must have been spot on. Y'all let me know in the comments. Was I too, was I too spot on? Was it too spot on? Spot on. That's crazy to me. You said YouTube killed the stream for using other content. That could be true as well, but that was also a clip as well. But most likely, Daryl. But I also feel they watching as well. So I'm not, I think that was kind of sensitive. I might have been pushing it a little bit too extreme. But Daryl, I do it all the time as well, Daryl. So it can't be using other people's content because I'm also giving my commentary as well. So anytime you use people's content, I'm not just like playing their content. I'm giving my perspective on other people's content. Or if there's a video, I do it. Y'all see me do it all the time. It doesn't come from one of my sources. So I think I was striking a chord. I ain't even gonna lie. I think I was pushing the boundaries a little bit. So we'll see. Let me see what y'all saying in the comments. You said that wasn't it. As long as you talk over it. That's what I'm saying, Lenny. I was talking over it. That can't be good because, hey, I was just giving my perspective and my commentary. So it definitely, y'all know what time it is. Y'all definitely know what time it is when it comes to pushing those boundaries on YouTube. And that was like, listen, that's how deeply I was diving. Like we're going straight to the source. And that video is hidden. Like that video that I just played, that's a hidden video. Like that video is not easy to find on YouTube. I was searching for it because I remember I used to go look it up. It's in a complete documentary as well. And that documentary has been pretty much wiped off of YouTube. But what I did was I found the clip of it. And I miss YouTube when it was like anything goes. There wasn't no censorship because they used to have all kind of content on there. I remember YouTube when it was gory and bloody. You know what I'm saying? I remember that side of YouTube as well. But, we live in a new day and age. But I definitely was pushing the boundaries a little bit and overstepping those lines because that's some shit they don't want people knowing about. But now y'all know if y'all caught it. There you go, Jay Manson. Follow the money. That's what we doing. I'm following the money, taking you directly to the source. On what's going on. And I'm going to just stick to what I know, though. I'm not, on this channel, I might, like you said, I'm going to save it for the Patreon. I'm going to say that for the Patreon. But if y'all just rejoining, make sure y'all hit that like button. Subscribe. If you brand new to the channel, subscribe. Leave your comments. Come over here, sign up to the Patreon. I'm just going to stick to what I know. I'm not going to push the boundaries because I would like to keep my channel. So I'm not going to push those boundaries. I'm just going to give my analysis on these markets and we're going to keep it at that. But y'all know what's going on. Y'all know the type of games that's being played. And I'm not here to fight it. I'm not here trying to buck the system. I'm not trying to wake people up neither. I'm just trying to do what I do. So if you want to come over here, sign up to the Patreon, come sign up, learn technical analysis. And we're going to keep it strictly technical analysis. So let's go ahead and come over to the economic calendar. Let's come to the economic calendar. Let's come to the economic calendar. We are currently it's currently March 30th, 2025. So we have 1 day left. So it's already the 31st over there in Asia. So one more day, the month of March will end, and that will end the first quarter of 2025. And then we will roll over into April. April 1st on Tuesday begins the second quarter of 2025. So Q2. So from April, May, June, that will be quarter 2 of 2025. So far as the economic calendar coming up this week, we got a lot of high impact news. Expect volatility. If you're day trading, be very cautious. This is my protocol or my rules. If you're day trading, whatever market you're in, I don't care what market you're in, be out the market by the AM session on Wednesday. So Wednesday, be out of the market by the AM session. After that, let them have it. Don't be in there trying to trade, just putting on positions because you're probably not experienced. And we have non-farm payroll. We got Jerome Powell. I'm sure Donald Trump is going to speak sometime this week. We got PMI. We got OPEC meetings. Non-farm payroll. Non-farm payroll stands for not for professionals. So definitely be cautious this week. Definitely be cautious. Let me see right quick. Lenny, you said I'm officially a YouTuber now. Man, I'm just talking TA, man. I don't know what happened. I don't know nothing. I ain't seen nothing. I don't know nothing. So don't consider me a YouTuber neither. I'm a down to earth, just regular person, just teaching. I would like to just teach technical analysis. That's it. I don't want no smoke. I don't need no cyber attack to my computer. I don't need nobody tracking me. I don't need no smoke. So that, and again, like I said, that definitely was not me playing other people's videos because I do it all the time. I review videos all the time on here. And that was definitely a strike because I was pushing the boundaries. I definitely was pushing the boundaries. We know everybody's tracked, but I'm talking about like, go see about this Boss Vision guy. You know what I'm saying? Go to his front door and let him know, hey, you're being too loud. You know what I'm saying? So I'm gonna keep it at that. It's already enough talking about the technical analysis. The style of TA that I talk about, that's pushing the boundaries. I don't know if y'all are aware of that or not, but the things I know when I'm coming to analyze the markets is pushing the boundaries. So I'm gonna keep it at that. So let's come over here to the crypto matrix. This is the market currently, the different asset classes. We have XRP currently trading at $2.10. You already know what's happening in the market. I'm gonna go over here in a minute, but why is XRP trading at $2.10 at the last month and the last few days of the quarter? Last month and the last few days of the quarter. So XRP at $2.10. We got XLM 26 cents. I hope y'all got that fiat ready. I hope y'all got those debt notes ready. I hope you got that fake ass money ready since they want to hate, but it is what it is. But we got XLM at 26 cents. We got XDC at 6 cents. We got HBAR at 16 cents. HBAR looking real good right now. HBAR looking real good. Bitcoin 81,000. I know they over there panicking right now. I know they definitely over there panicking. We got Ethereum down at 1,800. We got Algo 17 cents. We got Solana $125. So that's the overall market of the assets that I currently follow. So let's go ahead and since I can't talk about it in the video, if I can't review it in the video, let's go ahead and come over to the treasury notes. Remember what I highlighted earlier on the last live stream that got taken down. I was talking about the Fed Reserve and the United States Treasury, how they do a swap. So over here, this is the debt market. As you can see, the debt selling off. The debt market is selling off. Nobody's buying those treasuries. So that's what you see right here. Somebody's buying them, but right now they're not being bought up. So anytime the bonds go higher, that means somebody's buying those treasury bonds. But for example, when the treasury bonds go lower, that's them printing money into the system. When the treasury bonds go lower, no, my bad. I got that wrong. When the treasury bonds go lower, money becomes tighter. So money becomes more expensive as the treasuries sell off because they're not really printing like that. They're printing, but not at the rate that they normally would. So treasuries are selling off. That means the dollar goes higher, which makes the dollar more expensive. And whenever the treasuries go higher, that's when they turn the money printers on and money becomes cheaper, meaning inflation. So that's the game I was highlighting in that video. If y'all missed it, make sure y'all hit the like button. 27 people in the building. Help me get my likes back up. I was doing good on the last live stream, but they pretty much killed it. So if y'all just join and hit that like button for me, I appreciate it. Now let's go look at the dollar. This is the dollar currently consolidating on the 3-month time frame here in 21 hours. So 21 hours, we will have the quarterly close and that monthly close on the first quarter of 2025. First quarter of 2025. Let's go down to the monthly on the dollar. On the monthly time frame, we traded back down to a discount. What's the current market profile for the dollar? What's the current market profile for the dollar? There you go, Daryl. Consolidation. The dollar has been consolidating from for about 914 days. 914 days of consolidation. So this consolidation ranges back from 2022, September 2022, all the way out to March 2025. So it's been ranging inside of that consolidation. How do I know? Well, let's look at this swing high right here and this swing low. That's a range. That's the current range we're in. So I'm gonna take a Fibonacci from the high down to the low. So this swing high down to this swing low. And that's the range we're currently in. Let me fix my Fibonacci right quick. Let me hide that. Hide that and bring up the 0.75 level, just like that. So that's the range we're in for the dollar. There goes the midway point right there. So below the midway point is a discount, and look where the market is currently trading. And I'm highlighting this high, that swing high down to this low. I took a Fibonacci, I laid it from the high down to the low. And anytime we're in a consolidation, you want to find a swing high, swing low, and determine the dealing range. So the midway point of the Fibonacci, but anything below it is that discounted range. You see that? Anything below the Fibonacci is a discount. Excuse me. Anything below the 0.5 level, which is the midway point of the range, is a discount. And you can see the market trade back down into this 3-month fair value gap, which is at a discount. Anything above it is a premium. So anything above the 50% level of the dealing range is a premium. And you can see we rallied higher a few months ago, went up to a premium level, and then dropped back down lower. This gray highlighted area, that's a SIBI on the 3-month time frame. But what is this right here? Do y'all remember? What is this candle right here? This green candle, this bullish candle. What kind of PD array is that right there? I want details and specifics. What kind of PD array is that? I'm just highlighting how we're caught up in a range for the United States dollar. Anybody know what PD array, which stands for premium discount array? Which one is this? Is it a discount array or is it a premium array? And what kind of PD array is it? I'm waiting for somebody. I'm looking for Daryl, Lenny, Lawrence, somebody. Y'all definitely be on point. So what is it? I'm testing y'all. Make sure y'all get that likes up for me. Appreciate it. Subscribe if you're brand new to the channel. We're just going to stick to technical analysis over here. We can't talk about nothing else on YouTube, but technical analysis, we can just track the money anyway. We don't need to talk about nothing. Say less. We're just going to track the money. So I'm assuming y'all don't know what kind of PD array is it. It is. It's okay if y'all say y'all don't know. I prefer if y'all say y'all don't know, because that'll indicate to me that I have to teach it. So what PD array is this? Ed, shout out to you. Thank you for stepping up to the podium in the chat, Ed. At least you tried. And you're correct, Ed. That's an order block. But what kind of order block is it? What kind of order block? What kind of order block? Bingo. Shout out to you, Ed. Shout out to you. We're definitely going to put you in the front of the classroom. We're going to give you a special seat in the front of the chat. And we're going to acknowledge you. We're going to give you your own nameplate, and we're going to acknowledge that you are participating. And anytime I need you to do something, we're going to acknowledge you. We're going to put you in the front of the class with the rest of the smart students. So if you're in the back of the classroom, you're just watching, I'm going to need you to pay attention and participate. But this is a bearish order block. So green candles or bullish candles that are going higher, those are bearish order blocks. And then, well, what I'm trying to say is up close candles, they're bearish order blocks. Down close candles, they're bullish order blocks. So what I'm gonna do is this candle right here, I'm gonna take the opening price, which is right here. This is the opening price. I'm gonna calibrate it later, but you take a trend line, we drag it all the way out to the left. To the right. Boom. That is a bearish monthly order block. So what I like to do is I like to label it. I like to put the month, and then I like to put a minus in order block. That's a bearish minus. That's a bearish order block. You can see. Now let me just remove the. Let's go ahead and. No, I'm gonna keep those up. So remember the Fibonacci. We found the range, the current price range from the swing high down to the swing low. Shout out to you, Ed. Oh, okay. You went through the Patreon. That's what I'm saying. If y'all start reviewing the Patreon, you're going to start learning. So definitely go sign up from the Patreon. And y'all know I'm not, for the ones that's in it, y'all are getting advanced concepts and y'all really getting it. So I encourage people to go sign up for that, because I'm not going to be teaching this. I'm throwing it out there. So that's what I was pretty much doing. I was testing the people that's in the Patreon, who's been paying attention. And here you are with the answer. And I shout out to you. So, and most of the time I keep this to myself. I don't always refer to order blocks. So that's a bearish order block. It's above the midway point of the range, which makes this a premium array. So we're at the midway point. If the market is consolidating, as you can see, let me show you again, the market is consolidating. Anytime the market is consolidating, you want to determine the price, the dealing range from this swing high down to the swing low. And then you can see that the market is sideways trading. So you could be a trader inside of this range, but you got to know what you're doing. So I divided the range from swing high to swing low. We determined the midway point. Anything above the midway point is a premium market. We like to sell at premium. We like to buy at discount. Y'all remember that? We sell at premiums and buy at discounts. And that I'm going to be including that in the Patreon, the premium discounts, how to determine that. So you can see the market go down from discount. We trade higher. We go above the midway point. Anytime we cross over that, we're now in premium territory. We trade up into this candle right here, this order block. Let me draw Fibonacci from the opening price down to the close, up to the close. Or better yet, let me just take no, I'm not going to do that. You want to determine the midway point of the order block, which is right here at the 50% level of the order block. And this is the dollar. We're about to cover crypto in a minute, but this is for the people that really want to learn this skill set. You can see how the market trades up into this level. I'm going to remove the Fibonacci now. Let me remove that. You can see how the market moves up into this. If you wanted to set a limit order, you would set it at the opening price of the bearish order block. You can see how the market trades up into it. The midway point is a key level, because if we break through that, the order block most likely will fail, but we didn't break through it. So anywhere in between this range right here, let me highlight it. From the midway point to the opening price of the order block right there. And now I'm gonna color it a red color. Boom, like that. Or let me give something better on the eyes maybe. Let me lighten it up. So that's your window in the market where you can set your limit orders right there. from the opening price to the midway point, set your limit orders, and what does the market do from a premium? It drops down, back down to discount. So if this was any market, I don't trade the dollar, but if this was any other market, you could set your limit orders and short the market back down to discount, get out at the top of the fair value gap. Get out from the top of the fair value gap. So that's a little key to day trading, or that's short-term trading for example. That's a short-term trade where the trade lasted 1-2 trading days. Boom, out in the market. Is it random that it drops directly to this upper quadrant right there? It's not random that we drop down to the fair value gap and go directly right there and reject it. That's not random. So I just wanted to highlight that right quick. That's the dollar in a consolidation. You can still trade in these conditions. So that was the teaching lesson right there. You can trade inside of these consolidation conditions, but you have to determine the dealing range. You want to find a swing high. You want to find a swing high and a swing low. And pretty much the market is trapped inside of this high and this low right here. We're just trading inside of that range. And we're just consolidating. We haven't taken out the high, nor we haven't taken out the low. And this is a long-term chart. So each one of these candles take 30 days, roughly. So that's the dollar. Anytime the dollar is consolidation, anytime the dollar is in a consolidation, that makes the entire system, based on what we watched earlier, the video that we watched earlier, that I got, my live stream got disconnected and I got, they killed my live stream. If you know that the dollar is dead and it pretty much runs the entire system, what do you think the entire system does when the market or the dollar is uncertain? It's not showing strength. It's not even showing weakness. It's just ranging. And this range has been going on for at least 3 years. This sideways trading has been going on for 3 years, and that brings uncertainty into the markets. So when there's uncertainty in the markets, that makes the rest of the markets go volatile. They become real volatile, whether that's crypto, stocks, gold, and other assets. Money, people are trying to throw their money at anything. So that's what's going on. So let's go ahead and come over to XRP. Let's come over to XRP. And I'm not going to be too long tonight. They already done discouraged me from doing the live stream and talking about anything. So I'm going to keep it PG over here. I didn't do nothing X-rated or nothing. I'm just saying I got to keep it real light. I guess I'm on thin ice right now. So I got to keep it real, real discreet. So this is XRP on the 3-month time frame. Y'all already should know what's going on. If y'all brand new to the channel, make sure y'all subscribe. But we got 22 hours left for the first quarter of 2025 to end. We got 22 hours left. It's been a long time coming. We had a very strong fourth quarter last year. In the first quarter of this year, 2025, we started off January very strong. And after January, we came all the way back down from February and the entire March. We have been volatile and consolidating. So I'm already going to go ahead and start off my chart. You already know what's forming. I'm going to go ahead and outline it. To me, we're not going to do much in 22 hours. So I'm going to go ahead and confirm ahead of time. Remember, you don't want to confirm this until that candle completes. But I'm going to go ahead and confirm that there's a 3-month fair value gap in the form of a BISI forming in the market. So if you're analyzing your own charts, make sure you refer to this level right here that I'm outlining. Make sure y'all refer to this. I'm trying to decide what color I want to give it before I move forward. To hell with it. I'm going to give it this color right here. I'm going to keep that color right there. And we're going to refer to this. Now, what I'm going to do is I'm going to go ahead and calibrate it. Let me go ahead and calibrate it. Go to my settings. I go to my coordinates. I'm trying to get this wick low, the price of this wick low, because now that I know it's valid, I'm going to go ahead and do it for my own analysis. So the low of this candle right here is $1.7890. So $1.78. I'm over here using this coordinates tool right there, $1.7890. And next, I'm gonna get the high of this wick low. This is how we find fair value gaps. This is how we determine the fair value gaps. Let me I want to get the high, the wick high. That's a price level of 66.45. So 66.45 right there. So now this this fair value gap is coordinated, calibrated. It is officially calibrated. Now I want to label it. I'm gonna label it 3-month. FVG stands for fair value gap / BISI, buy side imbalance, sell side inefficiency. So that, boom, there we go. So this section in price was inefficient on the higher time frame. They didn't offer any selling in here. This is why it's called a fair value gap, because they have to drop it down to offer some type of fair value or sell side delivery, because these are algorithmic terms. This is from an algorithmic perspective. They're going to want to drop it down here to offer some type of efficiency in the market, because the market only went one direction. So algorithms like to fill in this void right here. So that's most likely what it's going to want to do. Let me take a Fibonacci. I'm going to lay it from the top, and I'm going to coordinate. I'm going to calibrate this Fibonacci as well, like I did the gap. I'm going to take the fib. I'm going to drop it from the top of the gap down to the low of the gap. Boom. Now let me go ahead and calibrate it. The Fibonacci tool. Go to coordinates. Get the low price of this candle. It is $1.7890. And then I'm going to get the high of this wick or this candle right here. And that is 66.45. Right there. So boom, there you go. If you ever wanted to know the price levels that XRP can return back down to. Wait a minute. I messed up. Let me change the color of this fair value gap. I don't like that it's too dark. I like to lighten it up a little bit. Let me hide that. 1 second, y'all. 1 second. I'm gonna lighten this this fair value gap up just a little bit, like that. And then I'm gonna take my Fibonacci right there. So there y'all go. Do y'all see the prices? Press 1 if y'all see the prices that XRP can refer back down to. And if they do decide to refer back down to these levels, what do y'all think? What do y'all think about those price levels at XRP? And here we are. We only got 22 hours left. And once this candle closes, hey, be prepared. Get ready. Definitely get ready. Okay, I appreciate the feedback. Definitely get ready. Are y'all still looking to buy XRP? I'm just curious. I know there's a lot of people still wanting to buy XRP, but how many people have bought it up here at around 211? How many people have bought it at $2? I'm just curious. One, we see it, champ. Be prepared. Okay. Shout out to you, Dundee. So y'all are going to be prepared. So again, this current candle, we got 22 hours left. In 22 hours, after 22 hours, this candle will close and boom, we will start the new quarter 2025. So get ready. So I'm already going to market that it's official. If we just look back what we did so far in the first quarter, we came up, we took out the previous all-time high. So I'm gonna go ahead and refer to that old all-time high. The new all-time high for XRP is $3.39, but I'm gonna refer to this high, which was the old high right there. Now these candles take 3 months. So I already told some people like, hey, go ahead and enjoy your summer. You know what I'm saying? Like, make sure y'all not so consumed in the news and all that. Make sure y'all are touching grass. Make sure y'all taking vacations, spending time with family, your kids. Find some hobbies, because these candles take a long time. to complete. And this asset class is still a brand new asset class. And XRP is an asset for the long term. So I've already been looking at certain channels, and people are like right there in between bearishness and bullishness. And I use that as sentiment. I like to go to YouTube. I like to see what the people are talking about, and they're right there in the middle. Yeah, the news and the headlines are bullish. That's where a lot of people are. That's where a lot of bullish sentiment is coming from, because of the headlines as far as the court case and legislation and regulations. But they don't know about that the market is algorithmic, and institutions, they're going to want to buy it at another opportunity. They're going to want to get it at a cheaper price. And they're still trying to get some of y'all out the market. So if they decide to drop the market down to discount, that's going to run off a whole lot of people. That's going to get a lot of people about this market. If you're leverage trading XRP, they're going to get you up out of here because you don't know what you're doing. But for you long-term investors, people are already burnt out. People already have been through enough. So a little retracement that might last 3 to 6 months, maybe 9 months. Because remember, each one of these candles take 3 months to complete. A retracement down to this void could take an entire 3 months. It could take an entire 6 months. It can take an entire 9 months. We're going to offer another discount and then displace higher. So that's the long-term macro that's setting up for XRP right now. Now let's go down to the monthly. Don't go down to the monthly time frame, and you can see what the market is doing clearly. It's clearly retracing. There goes that 3 month fair value gap, taking out all-time high. Look at the current candle for this month. This candle right here did not take out the previous month's low, nor did it come up and take out the previous month's high. We didn't go up and take no liquidity out from the previous month. So rolling over here in 22 hours, get ready, y'all. I'm trying to tell y'all, get ready. Here in 22 hours, knowing that the economic calendar this week, April will begin on a Tuesday. So knowing that we're about to open that new candle April 1st on Tuesday, with all of this high impact news in the market, all of this high impact news, also Donald Trump and other aspects in the economy going on, get ready. Let me go back. Get ready for the opening of this candle to be very volatile. Get ready for it to be very volatile, dropping down, taking out this sell side liquidity and liquidity from 6 months ago or 2 months ago right here. So we got liquidity pools that are stacking up below the market, and boom, there goes that large void in the market below the market on the 3 month time frame. And then look over to the right, there goes those price levels. So, hey, it's going to be a long summer. If y'all haven't noticed, which I have, I don't know about everybody else because you might be in a different time zone, but the days have gotten longer. Have y'all not noticed that the days have gotten longer? Since we're switching over to seasons, we're no longer in the winter, we're going into the spring, and you already know summers are very hot and long, depending where you're at. Going into the dog days of summer, you already know once we get around like July, August, September, those days are very long. Those days are very long. So that's why I say, man, don't be so stressed out about these markets. The best thing you could do is learn this skill set, learn how to read technical analysis. And that's what I'm doing in my Patreon. And I got testimonies already. I got a lot of people showing their testimonies. Learn this skill set. Continue to work your job. Stay balanced. Stay healthy. I'm gonna remind people to just like focus on your health. You know what I'm saying? Focus on your health this summer, or right now, to be honest. Start focusing on your health, so that y'all won't be stressed out. I know a lot of y'all might be stressed out on your day to day. Do physical activities, eat better foods, you know what I'm saying? Hydrate, and that will help relieve stress. You know what I'm saying? Whatever you can do that can relieve stress, because we're going to go into a few months right here where it's going to be very you know, it could be detrimental to your health if you're not conscious of what's going on. So, but that's why I'm here as well. You know what I'm saying? I'm here to guide people and teach people. So I'm over here guiding people on how to analyze this market and manage their assets. I'm not no financial advisor, but how to read these markets and better give them a better perspective of what's going on. Shout out to y'all. Shout out to you, OL. I know I'm pretty much like, you know, I'm probably talking directly to some of y'all. So yeah, health is wealth. And none of this shit matter if you cannot be healthy. If you ever fasted before, which I'm not no Muslim or nothing, but if you ever fasted before or haven't, try fasting intermediately. Don't just go out there and just think you're going to breathe air. Try different things and different, what I was about to say, holistic things that you can practice, holistic medicines and stuff like that. But definitely take your health and don't take it for granted. But this is the monthly time frame. Like I said, we got 22 hours left on XRP to close this monthly candle. And then boom, Tuesday, second quarter of the year. And I'm going to be doing this process all over again once we come to the end of the second quarter, which we're going to have 3 long months. So once we come to the end of the second quarter, I'm going to be reminding y'all what I see in the market going into the third quarter. So remember I said that, like, once we get to the end of the second quarter, I'm going to be giving y'all my analysis like, okay, this is what I see. And if you haven't known already, I've been calling this out for over a month. I got it documented on my live stream. So this highlighted area, this fair value gap on the 3-month time frame, I've been referring to it over a month. So for over a month, I've been telling y'all, hey, we can come back down to these price levels. So I'm just reminding y'all. Let's go down to the weekly time frame. After taking out buy side liquidity above the market, that's where pending orders were above the market. Now we have been consolidating for weeks. So this consolidation has been lasting roughly around, let me see right quick. Take a ruler. This consolidation has been taking place for over 119 days. So that's a very long time as far as months. So since December, when we ran up higher, took out the buy side liquidity. So from December all the way to March 2025, we have been ranging and consolidating. Like I did on the, what time frame was that? The monthly. Let me show you the Dylan range. So I'm going to take a Fibonacci. Oh, I did that on the dollar. So I'm going to take a Fibonacci from this swing high right here down to this swing low. Right there. This swing low up to that swing high. That's the Dylan range. That's the Dylan range. And remember, anything above the 50% level, that's a premium market. Anything below the 50% level, that's a discounted market. And you can see price starting to break out of that consolidation and want to reach for liquidity, which is previous week's lows. See the previous week's lows? So let me ask y'all this in the chat. What side of the market do y'all see this week's candle reaching for? Do you see it coming up, taking out the buy side, or do you see it coming down, taking out the sell side? What side of the market do y'all see it reaching for? Let me know in the comments. What side of the market do y'all see the current weekly candle reaching for? Okay, Donna, you said sell. Shout out to you, Scott. Shout out to you, Lenny. Shout out to you, Daryl. Shout out to you, Ed. Appreciate y'all participating. I agree with y'all as well. Shout out to you, Intrigue Enterprises. I agree with y'all. I'm calling for it to come down and take out sell side. So what I want to see, check it out. I want to see it drop down. Now, this might sound crazy to y'all because most of y'all are long-term investors and all y'all think about is, I want to see the market go higher. That ain't how the market works. You see how my mindset is different where I'm saying I want to see it come down, take out the sell side from the previous week's low, and then come down and take out this low from 3 weeks ago. And then eventually we can get it all this week as well. Don't mind you. We can do this all in 1 week where we come down and take out all this liquidity below the market, even this low right here. And I believe this low was from like 8 weeks ago. That low was from like 8 weeks ago. Let me draw it out right quick. Let me measure it. So from this candle right here, all the way to the current candle, that was 8 weeks ago, roughly 56 days ago. So this low right here, which was 8 weeks ago, we can, in this week alone, we can drop down and take out all this sell side liquidity and drop down to this 3-month fair value gap. And remember, this gap becomes valid on Tuesday, which will be April 1st. So y'all better expect this market is about to drop here shortly, going into the Q2 2025. And I'd rather it do that early in the second quarter. I'd rather us drop down early in the second quarter. So going into May and June, we could potentially start seeing us come out of that gap. So to be honest, if this market is really bullish, let me take y'all back out to the 3-month. Let's say we open up here on Tuesday. If this market was really bullish, I want to see it drop down, don't stay down here long, and displace higher. That will be an indication that, okay, this market is really strong. It is very bullish. If we open up, we retrace, leave a wick inside of this gap, and then start to move higher. That's what I prefer. And it can do that. Here we go, Center. Center, are you driving the boat, Center? Are you gonna let me drive the boat, or do you want to drive the boat? And you know why you're wrong, Center? Or does anybody know why Center could be potentially wrong? I'm not calling you out, Center. I actually appreciate the engagement, because these markets are based on your perspective. But if you clearly you just came in here, I could tell you just came in here. So could anybody explain to Center why would that weekly fair value gap really not mean nothing, to be honest? Why would the week? Now I know what you're talking about. Let me go down to the weekly first. Let me show you what Center is highlighting. Center is talking about this fair value gap right here on the weekly time frame. So let me go ahead and pull that up. Boom, right there. You see that? Don't think I don't know about it, Center. Y'all see it? It's right here. Let me make it a little darker. Right there. There goes that weekly fair value gap, Center. There goes that weekly fair value gap that you're referring to. And you're saying that that weekly fair value gap is a rejection perfectly. And you say you don't think it might break down to those levels. But what do I teach y'all? You read the comments. Shout out to you, Scott. You say monthly draws. Donna, higher time frame has more weight. YC, the higher time frame takes precedence. And Center, are you reading what the people are talking about? Because guess what? I talk about this. And you're not wrong, Center. I mean, you got to go a little bit deeper. And that's why I'm in the Patreon. If y'all have not signed up to the Patreon, you get that more advanced. Because let's say I don't talk about the 3-month. Let's say I just start on the weekly time frame. I can analyze on the weekly time frame, but I could potentially get things wrong, because guess what? I don't understand what's going on the higher time frame. So if you have not heard me say this before, and this goes for any time frame, the higher time frame has more influence over price. The higher time frame has more influence over the direction of price. These institutions, the market makers, they analyze the markets based on higher time frame charts and perspectives. So they're going to have that more long term. If Ripple is telling you, if the central banks are telling you, because y'all know if the central banks, they print money at will, they could just print money. That just means, okay, they don't have no need for money. So they can withstand market moves for decades, years, because they pretty much know what's going on. So if Brad Garlinghouse from Ripple tells you how many people from Ripple said this is a long-term investment, this is a long-term asset? How many times have they told y'all that? So that tells me they got time. They got time to watch these moves play out on the 3-month time frame. Let's go out to the 3-month. They have time. If you just look at this chart right here for XRP, this is the all-time history. This ain't nothing. This is not nothing, because let's go look at the dollar. Well, yeah, let's go look at the dollar, since XRP is the new digital, is the world, the new money. Let's go look at the dollar, and then I'm gonna come back to XRP. The dollar's history on this particular data feed goes all the way back to 1967. 1967. That's how much history the dollar is working with. That is if you want to look at it from a daily perspective, that is 21,000 days and 232 months? 232 months. So put that in perspective. And then when we come over here to XRP, this is the entire history of XRP. And if you know about XRP and you believe in the technology and you think that, you know, everything is going to be ran on this technology, as far as debt, the currencies, derivatives, stocks, bonds, treasuries, a lot of y'all believe that. Well, wouldn't this be an early history in XRP? Isn't this like an early history? Isn't this like not a lot of price action? This only starts in 2013 and it's 2025. And they have a long time. They have a long time to play these positions. Center, you say if they think it lower guys like you and I will scoop up as much as more. Don't see how that's what they want. Okay, Center, let me tell you this. And you saying you don't think. And again, that's your perspective, and you got the right to your perspective. But I'm sitting here telling you, you're dealing with the markets are algorithmic. The markets are algorithmic and they repeat over and over again. Now, I got experience watching this all day, every day. And you clearly don't be at all my live streams, but I got people in this live stream. I'm showing you down to the minute, down to the second, what price is doing. How many other people can show y'all that? How many other people can tell y'all, watch this before it happens and show you that it's going to happen in minutes? Right now, we're not analyzing the market intraday. I'm just giving y'all the macro perspective. But I can really flip shit upside down once I go down to a 1 minute time frame, a 5 minute time frame, and tell you, hey, this is what the market is about to do. I've done that many times on my channel. But again, Center, you putting your emotions in it. Well, I'm not gonna say you putting your emotions in it. I don't think that's the thing. I don't think I know. That's what I'm trying to refer. That's what I'm trying to get at. I don't think I know. For example, again, so Center, and I need people in the comments. Let's go to, this is Bitcoin. I'm gonna go out to the monthly time frame for Bitcoin. So for the people that say, well, I don't think that could happen. How many people in this live stream been watching me outline Bitcoin since November 2024? Some people have been here since November 2024. Center, I don't think you was following me then because I would have seen you in the live stream. I remember who all was in the chat. But how many people have been watching me outline Bitcoin since November 2024? Look at this candle right here. This candle right here is this fair value gap for Bitcoin. I was saying then, before this candle formed, I said, I want to see how we open and close December. In the middle of December, I was saying, I want to see how this candle closes right here. And this was before this candle closed. So let me hide this section of price. So that's what it looked like. If you look over to the right of my screen, that's what this was looking like. And I was already highlighting this gap in the market before it became valid. And then, okay, December closes. We go into January 2025. First thing we do is we open up, we drop down into that gap. We drop down into that gap. So Center, where you at? I need you to come to the front of the channel congregation. I love you. I'm not coming at you. I'm not coming at you in any type of way. But I like when people challenge what I got going on. I like when people come with a challenge because I can prove and tell. Because guess what? When I was saying this, I didn't say, oh, I think it would happen. I knew it was going to happen. And we got people in this live stream that was watching back then that can validate what I'm saying. And it's documented. It's on my channel. So again, I was highlighting this fair value gap. And I also, what did I do? I gave y'all the price levels as well ahead of time. So I took a Fibonacci. I draw from the top of the fair value gap down to the bottom of the fair value gap. So who remembers me doing this right here when I outline, hey, this is where Bitcoin can go. Matter of fact, let me go to YouTube. Let's go to YouTube. Let's go to my channel. Go to my channel. 1 second. Let's go to videos. And look at this video right here. It only got 97 views, which I don't care. I said what I said. Bitcoin holders, relax. It's not crashing. Now I'm gonna play the video. I'm gonna mute the volume. We don't need the volume. We don't need the volume. I'm gonna skip through it. And this was what? When was this? This was a month ago. So look down here right here. This says 1 month ago. Y'all see that? 1 month ago. And then this is me, you know, same live streaming, whatever. Look again. This area was already highlighted in my charts 1 month ago. You know what I'm saying? And then let me see right quick. Did I lay that Fibonacci down? I think I did. You said YouTube gonna kill my stream for playing my own video? That's funny. Oh, here I go right here. Here I go right here. 1 month ago. 1 month ago. And again, I could continue to go back. I just got to find the live stream. I got to find the damn live stream. But let me just show you that I know. I don't think I know. I don't think I know. But for example, you see me laying that Fibonacci, and this is Bitcoin. I showed you the price levels that Bitcoin can drop down to. You see that? I was showing you then 1 month ago, and I can go back 2 months ago. So let's come back to Bitcoin. You see the price levels and tell me, has Bitcoin dropped down to these levels since this live stream 1 month ago? So let's go back to Bitcoin. Oh, yes, we did. Look at that. We dropped down to these price levels. So do you see that? So I'm gonna need you, Center, where you at, man? You don't tell me you done went ghost. Come back to the, and this is why I'm gonna add a live call in. How many of y'all would call into the show, to the live stream, if I add like a live call in feature where I want y'all to call up. If you disagree, call up and tell me what you think, because I'm not thinking. I know. I'm not thinking at all. I know what's about to happen because I've seen this repeat over 1,000, over 1 million times. I've seen these markets do the same thing over 1 million times. They repeat and repeat. So again, I highlighted this in Bitcoin, just like I'm highlighting it right now in XRP. So again, I'm gonna be playing these live streams back like I just did. I'm gonna be playing them back, sitting here showing you, hey, look at XRP. This is a 3-month time frame. Look at these price levels. We got people saying, well, I don't think it can come back down here, but you know that the higher time frame has more influence over the market, over price. And I'm sitting here showing you. So, Lenny, what you said, what does the 3 month look like on BTC? Okay, let me go show you right quick. BTC, let's go out to the 3 month. So here in 21 hours, we're about to close this candle. And once we close it, what is this right here? Y'all tell me in the comments, what is this? What is this right here? What kind of candle is this? Carlos Garcia, I'm gonna answer your question right here in a second. Let me get back to teaching. Look at the comments, Carlos. People know what I'm talking about in the comments because they're learning. They're here to learn. And Carlos, I don't remember seeing you too often. So shout out if you're brand new. I definitely appreciate you if you're brand new. So this is Bitcoin. The opening price. Okay, there you go, Ed. It's a bullish order block. So what I'm doing is I take the opening price. Remember this 3 month time frame. Draw that out in time. That's a 3 month order block. If the market drops down to this level right here, that's the entry. Also, what is this right here? You see this green candle? What is this right here? And I'm gonna highlight that. There you go. It's a 3 month BISI, 3 month fair value gap. So that's what the 3 month is looking like on Bitcoin. Now let's see how we close this candle right here. Now, between the two, I prefer the order block. I prefer the order block because it's at a deeper discount and the fair value gap is kind of blended with the order block. So I would prefer the market drop down, come to this order block, and then I'm gonna measure the midway point of the order block. I'm not going to do that right now, but these are levels that we can trade to. Now, if we want to go any lower, well, we already did damage right here. So look at this fair value gap right here. We already traded down into that. We used it as a fair value gap on the 3-month time frame. We drop down. This candle takes 3 months, drops down, offer that discounted opportunity. And you want to ask me how I know? I'm still going to answer your question, Carlos. How do I know the market is going to drop down to these levels? Because if you're new to my channel, the markets are algorithmic. I'm not going to, people that are brand new, I'm not going to expect y'all to know every term that I'm using, because you have to come here every day. You got to sign up to the Patreon to understand what I'm talking about. I'm speaking in a language. I'm speaking in a code. The markers are algorithmic. They repeat over and over again. So y'all in the comments, what are the 4 things that the market does? Y'all can name them in the chat. What is the 4 things that repeat constantly in the market? Ed, you say, boss, when the market takes the fair value gap from the past and it just partially filled the inefficiency, will it retrace back to it again in the future? It's possible that it could, Ed. It's possible. So if you know, we don't never get rid of fair value gaps. And I also give you 3 types of fair value gaps. I give you a BISI, a SIBI. What's the third one? I give you a BISI, a SIBI. What's the third type of gap that I talk about? And then guess what? I got more gaps than just BISI, SIBI, and the third one I'm trying to get y'all to say. I got even more gaps. I've also presented those gaps as well. I want to say last week, I showed y'all more gaps that I presented. Shout out to you, High on Speed. Yes, you're missing one though. Expansion, retracement, consolidation, and what else? There's 4 market profiles that the market does over and over again. And this answers Carlos Garcia, your question. How do I know it's going to go drop down? Because the markers are algorithmic. Algorithms are in control of price. The market repeats. It's very generic. They run scripts over and over again. Now, you have to know this to understand. You have to know it and see it visually. The market does consolidation, expansion, retracement, and what else? Y'all missing one. Oh, there you go, Scott. Reversal. Consolidation, expansion, retracement, reversal. Consolidation, expansion, retracement, reversal. I've demonstrated that several times. I'm not going to do it right now because I'm trying to move forward, but just continue to watch and I'll go over all these profiles. Center, I say you're wrong. XRP does not break 160. If it even breaks $2, and I guess we will see what the future brings. Okay, Center. Let me ask you this. Center. How can you prove it? See, I'm up here proving it. I'm up here proving things that repeat over and over again. I love the challenge. I appreciate you joining the Center. I'm not coming at you. I'm not gonna take nothing personal. I'm not gonna call you nothing crazy as long as it keeps respectful in the chat. But you have to be able to prove what you're saying. Like you're saying you think. My people in my live stream have seen me show shit over and over again. My people in my live stream, people that come and support the live, they have seen me outline shit over and over again. And then I just sat here and proved to you. You know what I'm saying? I just sat here and proved to you. So for example, let me see how far my live streams go back. And I got some that's hidden. So I got some live streams that are hidden on my channel from earlier days. So let's go back. Let's see how far I can go back. Oh, damn. Just a month ago, huh? Let me see right quick. Yeah, I got some live streams that are older than a month ago. Let me see if I can go pull one up right quick. But Center, you have to come up here and prove. Carlos, you said, thank you. I'm new to crypto. I'm not sure if I should sell or buy again. Carlos, I'm not going to never give you financial advice. But again, let me go ahead and plug my information. If you want to learn how to do technical analysis, come over to the Patreon. And this is where I'm doing live. I do live mentorship, or I got content for people who are brand new. So come over here and subscribe if you're brand new and you want to learn a basic level to technical analysis. Just sign up to the Patreon. Let me do something right quick. Let me go pull up an old video. You started in September 2024 from what I've seen. No, I have not started in September 2024. Let's come to my channel. Again, just come up to the channel. That's probably when you found me. But what does this say right here? You see that right there? I joined in December 2023. I started making videos around that time. So I got older content around that December, January 2024 time frame. So again, that's how long I've been. It's not a long time, but a lot of y'all are newer to me. But let me go find this old video since we got Center. And I'm up Center again. I'm up here proving, like, how many people can get up here and give y'all live analysis and show y'all real time, you know. And for the people that like to stay to my live stream, like they stay late. So a lot of y'all might click on the live stream. Y'all might hang out for a minute and then y'all leave. But for the people that stay a little bit longer, those are the ones that always catch the behind, you know, that extra little sauce, that extra little magic that I throw out to y'all. So you never know what I'm going to present to you when you stay a little bit longer. Be a little bit patient. Go to my live streams. 1 second, y'all. 1 second. Let me see. Let's go back to February 2025. Nope. Let's go back a little bit further. And if you're just joining, make sure y'all hit that like button, subscribe if you're brand new. Let's go back a little bit further. Let's go back a little bit further. Should I go back to December 2024? Let's go back to November. Let's go back to November. Let me see right quick. Nah, not that one. I'm looking up a video, y'all. I'm looking up a video. Let me come back to the chart right quick while I talk. And I'm just kicking it tonight, y'all. We're drawing down at the end of the month. It's nothing. If y'all watched my live stream yesterday, I gave some good detail. But today we're just kicking it, and I'm just giving a little extra, you know, just a little different, you know, perspective. If you notice yet, I have not dropped down intraday. So we're not even looking at the market intraday. It's nothing really to watch so far on intraday. I'm giving y'all that long-term analysis. Long-term analysis. So let me pull up this video right quick. This is an old video from December, 4 months ago. Let me see what I was talking about 4 months ago. And this was before I got on camera. So if y'all, who been following me since before I was on cam? Who been following me since then? Yeah, what is this? Bitcoin? Yeah. That's Bitcoin. Let me see right quick. Shout out to y'all who've been following me since then. But for example, I hope Center is still in here since I don't know what I'm talking about. Let me pull that up right quick. Where'd the video go? Ah, shit. My bad. Let me bring that over. Right here. So this video right here. This was a live stream 4 months ago. We don't need no audio. This was 4 months ago. You see that? Stream 4 months ago. So this is not on my channel currently. It's hidden. But look at me on, this is Bitcoin. This is Bitcoin. Me outlining Bitcoin. Also XRP, all this. This is when Bitcoin was at, look, it didn't even break $100,000 yet. Who remembers when Bitcoin poked up right below 100K? It was like 99, goddamn 800. You know what I'm saying? And we stopped right at Bitcoin and we consolidated for weeks. And this was me ahead of time outlining. Look at Bitcoin now. This is Bitcoin now. Let me go back down to that weekly time frame. This is how long it's been. So, you know what I'm saying? Like 4 months ago, we was right here. I remember this. This counter right here stopped at 99,860. 99,860. And then back on this video right here, that's what I'm outlining right there. You see that? That's how long it's been, 4 months ago. Now, ever since then, this is what we done with Bitcoin. We broke 100K, we consolidated, and we retraced down to discount. So I need to go find the video a few months after that. So this is Bitcoin 4 months ago. So Center, I need you to prove, Center. Like, you can't just say, well, I think this is going to happen. Center, do you do technical analysis? That's what I'm trying to figure out. Like, do you do technical analysis? Do you do TA? It be the people that don't do TA telling you what they think is going to happen. Have no experience at all. And guess what? I'm a trader. I'm not just no regular TA giving my opinion. No, I just do strictly charts, strictly price action. So I'm gonna need to know if you do technical analysis. Carlos, you said, in how many months will it get back to up passing $3? It depends, Carlos. We take it 1 month at a time. We take it 1 week at a time. We take it 1 day at a time. We take it 1 hour at a time. Again, I know you're brand new. I'm giving you a macro perspective. Also, I'm giving you the fundamentals on how the market moves, how price moves. So that's pretty much what you got to continue to pay attention. If you're brand new to the channel, just pay attention, Carlos. Pay attention. And you're going to catch on. You're eventually going to catch on to what I'm talking about and how I'm outlining the market. Let's go to this video right here. I'm trying to go to where I outlined that fair value gap for Bitcoin. This was 3 months ago. And this was when I was live streaming Bitcoin breaking 100,000. But y'all definitely go check out their Patreon. Check out the Patreon. I'm not trying to sell people short. I'm putting work in. I'm putting labor in. Like, the videos is taking time and work. You know what I'm saying? You're getting it at a discount. But I feel like, it's definitely valuable, and it's something that you can take with you and have it forever, to be honest. You can take the knowledge, information, take notes, and have it forever, and nobody can take it from you. Anyway, I cannot find the video where I was first outlining that 3 month fair value gap. Let me see. Was it in December? I think it was in December. So let me go out to Bitcoin right quick. Let's go out to the 3 month time frame or the monthly. Back in this candle right here, December. Yeah. So let's go to December, the end of December. End of December. Center, you still here? Let me know if you still here, Center. Let me know. Okay, shout out to you. Shout out to you. You never answered my question, Center, though. Do you do technical analysis? I'm trying to see, do you do analysis, any type of analysis? Do you do TA? Let me know in the comments. Okay, so what style of analysis do you do? How many years of experience do you have? Do you do it full time? Do you do it for a hobby? Those are the questions I need to know. Do you do it as a hobby? Do you do it as an income? What kind of analysis do you do? Do you do it as a business? We talking about levels, you know what I'm saying? We talking different levels of analysis. Oh, no doubt, Lenny. No doubt. No doubt. It's definitely to be determined. But you better believe I got the receipts for everything. That's why if you look at my thumbnails, they're dated. The live streams, they're dated. That's so I can refer back to people who might doubt what I'm saying. So again, I have no doubt that, again, right now, you already see XRP down to 209. Okay, for example, let's go ahead and drop down to the weekly time frame. Y'all already told me that y'all see the market coming down, and Center, you said we don't drop below this weekly fair value gap, when this weekly fair value gap is not significant when it comes to this 3 month fair value gap. This weekly fair value gap is like a stepchild to this 3 month fair value gap. I just want you to know that. This weekly fair value gap right here in the form of a BISI is a stepchild when it comes to this larger gap in the market. Oh, y'all make sure y'all remind me as well. Lenny, and for those are watching, we're not trying to shame Center. We just want him to learn. I just want him to learn. I want to teach him that there's levels to analysis. There's levels to this. So let's go down to the daily time frame. Let's start working our way down. Let's go down to the daily time frame. You already see weakness in the market already. It is currently Monday, Asia. We already took out the previous day's low. So let's start working our way down. So what I'm about to do now is let's go down intraday. Let's go down to the 1 hour time frame. Next thing I want to do is let's go ahead and remove the weekly gap and that monthly fair value gap. Next thing I'm gonna do is I'm gonna throw up these little dividers. Now I'm on the hourly time frame, the 1 hour time frame. Let me go ahead and zoom out to the 4 hour. Now this is the 4 hour time frame. So y'all tell me, what should y'all be doing? Like, for the people that pay attention, what's one thing that I'm analyzing? What do I want to see in the market? Center, I would hope you would buy more at those levels. I mean, of course, it's going to make sense, but you said you don't think it's going down there. So by you watching me, and I said, hey, it's going to go down there. Now, I'm not saying, check it out. Don't get it twisted. I do a step-by-step process. I'm back on the 3 month time frame. Let me bring up the gap again. Initially, once we close this candle right here and we open up the new quarterly candle, my initial target, again, I got targets. As the market goes down, I got targets. My initial target for entry would be the top of the gap. Boom, right there. You see that? That's my initial target. Then once we go down there, let's say my limit order is triggered, I will wait. I got a protocol while I'm waiting. I'm waiting for more information, whether we want to reject it or go higher. So let's say we start to see weakness again and we're just hanging out right here at the top of the gap and we start to go lower. As we move lower into the gap, my next target will be right here. Boom. And then guess what? At that level right there, I will be waiting. I will be waiting for more information. Do we drop right here and displace higher? Or do we drop right here and start to show weakness and go lower? Now, if we start to show weakness and go lower, then my next target will be right here. So I have a step-by-step process that I do. I don't just say, oh, yeah, I see it going down to 66 cents at the bottom of the gap. It can do that, but we're far away from that. I don't see that right now. Or I don't even see it going down to 122 at the moment. Because again, each one of these candles take 3 months. We can trade down into these levels and hang out in here for 3 months. I've seen it. So we can drop down into this gap, hang out in this area. But initially, I got targets. I want to see this level. I'm going to wait, see if we want to displace higher. If we don't, my next level will be the upper quadrant, which is the 0.75 level, which is $1.50. So let's say we start coming in right in the middle of the fair value gap between the upper and the high of the fair value gap, and we're just hanging out. I'm going to want to see it come down to $1.50. Okay, once we get to $1.50, what is price doing on lower time frames? That's going to help me determine if we're going to start moving higher or if we're going to start going deeper into the gap. So again, if you want those step-by-step processes, go to the Patreon, sign up to the Patreon. Those are some things that I'm leaving out. So you might not understand what I'm saying. Can we still go up? Yes, Carlos. Yes, we can go up. But Carlos, the market does. Let me tell you what the market does. The candlesticks, they either consolidate, expand, whether higher or lower, retrace or reverse. Also, the market is either seeking liquidity above the market or below the market. Above the market is called buy side liquidity. Below the market is called sell side liquidity. And then the third thing it's doing is looking to fill inefficiencies, which is gaps in the market. Whether that's a bullish fair value gap in the form of a BISI, buy side imbalance, sell side inefficiency, or a bearish fair value gap in the form of a SIBI, sell side imbalance, Buy side inefficiency. See the terms? I know you're brand new, so you might not understand that, but the people that have been watching every day, they understand what I'm saying. What else does it do? That's all it does. That's all price does. It's very generic. These things repeat over and over again, but you got to learn the language. You're brand new. I'm not going to expect you, and there's many forms of analysis, but I'm going to tell you right now, this style of technical analysis is the most purest out there. The next step from this is algorithmic trading, and we're talking about at the computer level, like non-human. The next step from the type of analysis that I do is artificial intelligence. Because I'm a human, I can't do certain things. But what I'm about to show y'all right now, since y'all like to you know, well, I've done this many times. I ain't got nothing to prove. But since a lot of y'all might be curious, let's go ahead and drop down to the 1 hour. Go down to the 1 hour. Let's go down intraday. Anything below the daily time frame is what? Anything below the daily time frame is what? Center, $2.22 is the key level and should be broken upwards. We set 204 as our last Fibonacci level, and we can visit there again. April, May will be not, and my targets stand at $5 to $8 levels as expected. Center, you never told me what kind of experience you have, and you never told me what kind of experience you have as an analyst. Center, what kind of, and Center, you used to come in here and rock with me. Center, you used to come over here and show love, but now you the expert. So I see what's going on. Shout out to you, and you're entitled to your own analysis. But again, I would love for you to create a YouTube channel or some type of platform so we can see what you're seeing. I would love to see you come to the charts and break down your analysis and show and prove how you analyze the market, regardless of what style of trading you do. I would love to see you do your own analysis. Do you have a YouTube channel? Do you have a X account? What platform can I see your analysis on? I would love to see that. I would love to see it. You said, I'm not the expert. You are. I'm just sharing to see if I can influence your analysis. You can't influence my analysis. And then you just say you're not an expert. I'm a specialist. I'm a specialist becoming an expert. How about that? I'm a specialist because I specialize in doing what I show y'all. And as time goes on, as my experience grows, I will then become the expert. I'm humble enough to say I'm not no expert just yet. But as my time goes throughout the years, doing this over and over again, I will become the expert in these markets. Some people might consider me an expert now, but I'm humble enough to say, hey, I'm not no expert yet, but I'm definitely a specialist where I can get in this market and kill it. If y'all don't understand what I do, go watch my shorts on my channel. Go watch my shorts. Matter of fact, I can show y'all right quick. Let me show y'all right quick. And this is how I started my channel. I started off on shorts. For example, let me see right quick. This ain't no flex neither, but this is what I mean by I'm a specialist. This is what I do. This is me trading the NASDAQ, the S&P, and this analysis goes into any asset class. This is me shorting the market, 12 contracts. Seeking a profit of about $4,000. So this is what I mean by showing and proving. And people have seen me do this behind the scenes as well. This is just me coming to YouTube, creating a YouTube channel. So this is me showing you that I know where the market is going to go beforehand. This is me being strategic and with precision. So how can you influence this? So Center, can you show me, can you tell me, you know what I'm saying? Can you show me your analysis and can you prove it? Can you prove it? And if you cannot do this right here, you cannot influence what I do. That's all I'm saying. And that's not me being cocky. That's not me being arrogant. This is just me. I'm competitive. So you got to be able to show me. You got to show me that you can do some form of this with precision. And I got some of these hidden too. I'll kind of remove some of my shorts. They're not all on my channel. I mean, they're not all on my page. So I have definitely removed some of my shorts. Let me see right quick. And I could do it with any amount. You know what I'm saying? I could do it with any amount. Here's 12 contracts going long in the market. So this is what I'm saying, Senator. Don't go ghost now. You used to come over here and rock with me. Now you just the expert now. That's crazy to me. That's crazy. I thought you was a student. But the student sometimes think he's better than the master. I'm just joking. I'm just bullshitting. I'm not no arrogant person, y'all. I'm very humble. I'm very down to earth. But I gotta be able to pop my shit sometimes. Let me pop my shit sometimes. Everybody deserve to pop their shit. Talk a little shit, you know what I'm saying? And this is what I mean. Come watch my shorts on my channel. That's me proving and showing you without saying nothing that I'm popping my shit. But let me be humble sometimes. You know, I'm very humble. I'm not arrogant. Hopefully that don't turn nobody off. I'm very humble. You can talk to me. I can communicate with you. You just ask people in my Discord or whatever. I'm very humble. But let me pop my shit. Appreciate it, y'all. Appreciate it. Hit that like button, subscribe. So let's go ahead and drop down to the hourly time frame. Remember, this is roughly about 8 weeks of price action. Oh, I love Miami. I love Center. I love Miami. Miami is like my second home. So I live in Louisiana, but Miami is my second home. And you already know, once crypto go up, Florida is definitely going to be, you know what I'm saying? Like Florida is definitely somewhere I would love to move. But at the same time, I don't know, man, because the Miami housing market, like, man, they want, the property taxes in Florida is ridiculous. The insurance, the hurricane insurance. I live in Louisiana, so I already know about it. But in Florida, it hit different. It definitely hit different. I wouldn't want to live in Miami, though. I'm trying to live like north of Miami. I like Fort Lauderdale, Boca Raton, all that. You know what I'm saying? Somewhere that's not inside of Miami. So this is a 4-hour time frame. What I'm about to do is I'm about to highlight the liquidity. Highlight the liquidity. Here we go. We got liquidity, sell side liquidity from what? 1, 2, 3 weeks ago. 1, 2, 3 weeks ago. Let's go ahead and highlight last week's sell side liquidity. And I'm not going to be too much longer, y'all. I'm about to get up out of here. This is just a brief market review. I'm going to review the other assets as well. We got sell side liquidity right here from last week. We have currently started the new week of trading. You can already see, and this is for Carlos. Carlos, this might be new to you. Sign up to the Patreon if you want to learn this skill set. There's sell side liquidity right here. We know that the market, because it's algorithmic, is always going to want to reach for liquidity in the market. There goes sell side liquidity. You can already see the market dropping down. So center. You see this monthly fair value gap highlighted in pink? Now, let's say I remove that. Let me go ahead and hide that. So as you see, when I hide it and I'm no longer referring to it, I don't need to refer to that gap. I know that, hey, look at all this liquidity that's below the market. And we all know that the market makers always seek liquidity. They engineer liquidity, meaning they're building orders in the market. And they're always going to refer to liquidity pools. That's where their pending orders are in the market. So for the people, for example, let's go back 3 weeks ago. How many people put in buy limit orders that are leverage trading? How many people put in orders to go long for XRP? So typically, those people put in trades, and I've seen influencers do this and talk about it, where they will set limit orders to leverage trade, and they be holding for like weeks at a time, which is stupid. That's stupid as hell because they're trying to take day trading opportunities, but holding their trades for weeks at a time. So let's say from this low right here, all the way up to this swing high, they're holding their longs. But because they don't know what's going on in the market, and the market is algorithmic, the market makers reverse the market to go short. And guess what's happening to their profits? Guess what's happening to their profits? They're losing profits, and eventually they're going to be underwater because the people that went long right here, look where the market is reaching for. It's coming back down to take them out the market, reaching for sell side liquidity below the market. Below these lows are pending orders. Below these lows are pending orders. Remember that. So look at this fair value gap right here, all the way at the bottom. This stretches all the way back out for 8 weeks ago. See this low? This candle's low was from 8 weeks ago. 8 weeks ago. Imagine that. Imagine how I keep things in my charts for months at a time, because I know that the market makers and the algorithm is going to eventually want to refer back to those levels. So without showing you the liquidity pool, that's what I'm looking at from a naked chart perspective. So imagine when I'm doing my own personal analysis, I don't have all this stuff on my chart like I'm showing y'all right now. I already know where the price levels are. So I'm more so naked trading on my chart. I have less things on my chart, keeps it from being so distracting. But guess what's below this low right here, or at the very top of this low? Boom. That 3-month fair value gap. Boom. Do you think that's ironic? You see that about down there below the chart? See where it says 3-month fair value gap? So, Center, this is how I'm trying to tell you. We're going to see here in maybe a week or two. We're going to see if you know what you're talking about. Because what you said is not going to break below $2.22. Or what you said, let me see. 222 is the key level and should be broken upwards. Okay. And he said we set 204 as our last Fibonacci. Okay. So where did you set your Fibonacci at? I'm trying to figure out, because we're already at 209 right now. So if 204 is your last, look at these lows right here, for example. Look at this sell side. We're going to see this overnight as well. So we're going to see this going into, we're going to see this come into play during the London session. So look at this low right here. That low is at $2.05. And you're saying your last low is 204. And then look at this low way down here from a few weeks ago. That's $1.90. So once the market comes down to $1.90, what you going to say then, Center? What are you going to say then? Once the market comes down to $1.90, is your analysis, are you going to just completely abandon it? I'm just trying to figure it out, because we're going for that $1.90 sell side liquidity. And then boom, at the top of the fair value gap, $1.78. And then I'm going to be giving you a call at $1.78. I'm going to be asking for you. I'm going to expect you to come to the next live stream. So I'm already forecasting the week so far. So if y'all want more advanced, let's go down to the hourly. Let's go down to the hourly time frame. You saying we will see? Well, guess what? Your last stop, we're about to come down to that last stop here shortly. In a few hours, we're going to come down and take out that last stop. You might get it during the Asia session. It's 10:41 so far. Let's go down to the 15-minute time frame. 15-minute time frame. Now we're intraday, y'all. We intraday. Talking about we will see. No, I'm going to tell you, you're going to see. You're going to see. But it's all love, Center. I ain't coming at you no type of way. Let me pop my shit. Asia session. Let me see right quick. Back out to the hourly. Throw up my daily dividers. Lenny, you said let's just stay alive until we hit it. Let's just stay live. Okay, I got you. We might not get it tonight. Might not get it tonight, Lenny. You know why? What's the current market profile so far? What's the market profile? And I'm not going past London. I got other stuff to do on the computer and shit, so I ain't gonna go past London. Or past Asia session. Yeah, we in consolidation, but what are we, high resistance or low resistance currently? You always want to determine the conditions. What conditions are in the market right now? What's the current conditions? Low resistance or high resistance? There you go. So being that we're in a high resistance liquidity condition, the market could chop around. Now we can sell off. We can definitely sell off here within this session, but we're just in a high resistance condition right now. Let me go down to a 5-minute time frame. Asia session. There goes that 205 level. So Center, I don't know how correct you're gonna be. You might be seeing tonight, Center. You might be seeing once we cross over at midnight, you might be seeing very soon that we're going to break below that 204 level. And then you're just going to have to completely abandon your analysis and come over to the dark side and adopt what I'm talking about. It is currently 10 o'clock and we are about to enter the fourth quarter of the 10 o'clock hour. High resistance. Y'all can see the deep retracements. High resistance. Now let's drop down to a lower time frame. From the 5 minutes, let's go down to the 1 minute. We also got a macro coming up here shortly. So we just retrace. I see a 1 minute SIBI. I'm gonna highlight that. Also, who else is taking y'all down to these lower time frames and analyzing the market from this perspective? I'm just trying to figure out who else is doing that. Let's find the liquidity. Let me go back out to the 5 minute. We got sell side liquidity right here. I'm gonna highlight that. We got buy side liquidity right here from the PM session earlier today. Buy side liquidity. And then we got all this high resistance in here after the PM session. So all this choppiness, this back and forth. Once we drop down right here, we took out this sell side liquidity from the lunch hour. So let me highlight that. This was sell side liquidity that they grabbed from the lunch hour. So look how the market drops down, takes out sell side right here. That's from the New York lunch hour. There were orders below that. They buy it up, send it back higher, take out some buy side liquidity. What is this candle right here? Y'all tell me in the comments. What is this? What is that candle right here? This candle right here, this bullish green candle. What PD array is that? Right here. What is this candle right here? Y'all tell me in the comments. What kind of order block? What kind of order block? There you go, bearish order block. So what I'm gonna do is take the candle from the opening price. And this is for the people that be doubting the type of shit I be on. You know what I'm saying? This is for the people that be doubting. So look at that bearish order block right there. Is it random that the market trades up to it and it sells off? Is that random? I'm just trying to figure out, is that random? Now let me take the midway point of that order block. Let's go find the midway point of the order block. Okay, we didn't reach up to it, so I'm not going to outline it. But definitely bearish order block. After taking out sell side liquidity earlier, we rally up, trade back to this order block. If you don't want to use the order block, what is this right here? Y'all tell me what this is right here. And I know a lot of y'all about to get it wrong. If you really pay attention, you will understand what this is right here. What is this right here? I'm gonna call it a BISI. We didn't really trade through it because we didn't get any candle closes above it. So it's not an inversion. If we would have start closing above it and then come back down to it, that would have been an inversion. But it's definitely an inefficiency, but it's also a order block. Fair value gap in the form of a BISI. So let's define the dealing range. Let's go ahead and define the dealing range. So from this high right here that they left behind during the PM session down to this low right here. That's what I'm defining. This swing high down to this swing low. I label Fibonacci from the swing high down to swing low. I'm defining the dealing range. I'm trying to figure out, okay, are we in a premium or a discount? So remember the midway point, which is the 50% level right here, 50% level. Anything below it is a discount. Anything above it is a premium. So after the market drops down, takes out sell side liquidity below the market inside of a discounted range, price trades back inside the range. What makes the range? This swing high, this swing low. We trade back into the range. We go above the 50% level. Once we break above the 50% level, that's when the algorithm starts offering premium opportunity to sell. So look what we do. We trade above the 50. We start going inside of the fair value gap and order block. So you can look for your selling opportunities above the 50% level, and then there goes the PD arrays. BISI, order block. You could have set a limit order at the fair value gap, but if you wanted that deeper selling or that deeper premium inside of the range, you set your limit order at the order block, and then boom, the market breaks down, back down to discount, and then breaks out of the range. Also, there's something called internal range liquidity and external range liquidity. Y'all might not have heard this one before. There's something called, take your notes, and this is what I be talking about, the people that be staying longer. Y'all be getting the extra sauce. So shout out to y'all. We got 33 people in the building. If y'all brand new, subscribe to the channel, hit that like button, and subscribe to the Patreon. So this is internal range liquidity and external range liquidity. So you know how we define the range from swing high to swing low. You want to find swing points, swing highs, swing lows. And for the people in the Patreon, I'm going to make the video for this as well. But here you go for the people who are not signed up. I'm not going to give all the details, but you're going to get some of it. So this right here creates a swing high. And then this right here creates the swing low. So this is our dealing range. We're defining the range. What is internal range liquidity? After we form this low, the market goes back inside the range, and that's called internal range liquidity. And as the market goes back into internal range liquidity, you look for PD arrays, fair value gaps, order blocks, liquidity pools, because guess what? Not only did it trade back inside of this fair value gap highlighted in gray, it also did what? It took out buy side liquidity right here. So let me highlight that. See that high right there? That's buy side liquidity. So there you go. 3 different PD arrays that you could use. So you see that buy side liquidity at that swing high? We trade up into the fair value gap, take out buy side liquidity, and then trade up into the order block. That was very strong indication that the market is going to sell off. And as we trade back inside internal range liquidity, and this is opposite for bullish conditions. So what you want to determine is the direction of price based on the higher time frame. So you know the market is weak. So you want to look for shorting opportunities based on the higher time frame. So if the market is selling off on the higher time frame, you want to look for opportunities of the market going higher. Remember what I always taught y'all or told y'all. You want to sell the market when the price is going higher. You want to be looking to sell the market as price goes higher on these consecutive candles right here. We go back inside the range, which is internal range liquidity. Candlesticks go higher. You set your limit orders. You short the market. And guess what? The market sells off. And what's external range liquidity? When the market breaks the range, like we see right here. So from internal range liquidity, Let me take some trend lines. Internal range liquidity. 1 second. Internal range liquidity. External range liquidity, outside of the range. See that? So we trade in the range, internal. We leave the range, external. So whenever the market goes internally, for example, we trade inside the range. I'm about to remove the Fibonacci. Let me remove that Fibonacci. I'm gonna remove this right here. And I'm gonna drag this low to this low right here. Sell side liquidity. Right there. You see that swing low? That's the low of the range. So if you can identify, okay, the market is moving internally. It's going back inside of the range from this swing high up here to this swing low. We're moving it back inside the range. We're at a premium. We trade up into premium arrays. Remember PD arrays? Well, there goes the premium. Anything above that 50% level, premium arrays. We trade back up into a premium. We take out buy side liquidity, which is a premium array. We trade up into a bearish order block, which is a premium array. So you got multiple different levels that you can short the market at. And where would your target be to get out the market? Imagine where your target would be at this low right here. External range liquidity, which is sell side liquidity as well. So that's more advanced. You see how more advanced I can get? That's your target to get out the market right there at this low. See that? So internal range liquidity, trade back up to a premium array. Let's say we set a limit order. And this is for the people who think I don't know where the market is going to go weeks and months ahead of time when I can do it right now, calling it live. So let's just say you take the entry at the order block. Boom, right there. That's your entry. See that? Now let's say you exit at the sell side liquidity, which is the external range liquidity pool. Right there. That's your exit. Now let's determine from entry, that's where your limit order is, down to exit. That's where your take profit is. That's a return of 2.38%. 2.38%. How long did that take as well? Let me see how long that took. From entry down to take profit. That took 1 hour and 55 minutes with a return of $2.37, a 2.37% return. 1 hour and 55 minutes, 2.37% return. Now, like what I like to do, if you're brand new, let's go ahead and put some money behind that. Let's go ahead and put money. But before we do that, well, I'm going to do the risk later. Let's go ahead and put the money behind that. So let's say, let me take this tool right here. Let's get short. There's a tool on TradingView that you can determine your risk and take profit. So from entry down to take profit, that's where you set your limit order to exit the market down here. And your risk will be at the high of the order block, which is right here. You're risking 0.5%. So look at your stop loss right here. All this red shaded area, that's your stop loss. And then look at your take profit. Your risk to reward is 4.77%. So you know how you normally get like a 1-to-1 risk to reward? Well, this is almost a 5-to-1 risk to reward take profit. And that's a return of 2.39%. Now let's put some money behind it. Let's say you got $50,000 and you got to have some money to play these markets. And you're going to have some money after you get rich in XRP. I'm manifesting that all for everybody. But I don't have my calculator on me, but y'all tell me in the comments, $50,000 times 2.39%. And this trade lasted 1 hour and 55 minutes. Y'all tell me in the comments what that is. Okay, I'm getting y'all. Scott, you said 1185. Daryl, you said 1195. Which one is it? Okay, y'all saying 1195. I'm gonna go with the 1195. So that's a profit of $1,195, and that took an hour and 55 minutes. Now let's determine your risk. So do that $50,000 times 0.5%. Y'all tell me in the comments what your risk is. What is your risk? You always want to calculate your risk because the market could come against you. You're going to have losing trades, but that's just part of trading. That's a part of the business. Cost of doing business. Who said 2,500? Somebody math is off. 2,500 or $25? Scott, I don't have my calculator on me, so I can't double check behind y'all. I'm going off of what y'all saying. It's just 0.5, not 5%, 0.5%. Who got their calculator out? 50,000 times 0.5%. That's your risk. Okay, y'all saying $25. So imagine that. Imagine that. This is a quick scalp in the market. It's like it's a scalp. Now y'all saying 250. Let me pull my calculator out, man. I gotta go to my computer. Let me pull my calculator out. Y'all saying 250. Let me go double check behind y'all. I thought I could rely on y'all. Let's do 50,000 times, what was it? 0.5%. Wait a minute. Okay, that's $250. Y'all good. It's no big deal. It's $250. So you're willing to risk $250 to profit $1,195. Let me go ahead and double check behind y'all on that as well. So y'all were correct. $1,195. So look at your risk to reward. So on this particular trade, you're willing to risk. Let me go ahead and put it up here. $250 for a reward of $1,195. And that trade took an hour, almost 2 hours. So how many of y'all, who all in this live stream, especially who all in this live stream, whose jobs paid them $1,195 in 2 hours? I'm just curious. How many of y'all jobs pay $1,195 in 2 hours? And y'all also see me do this in other asset classes as well. Y'all also see me do this in other asset classes as well, especially the futures. So how many of y'all jobs paid $1,195? Let me know in the comments. In 2 hours. And this is me showing y'all. Remember, don't forget what I told y'all. We traded back inside the range, internal range liquidity, and we target the external range liquidity right here at this sell side liquidity right there. After we do that, we go into a consolidation. I'm sure somewhere in the back in time over here. We didn't just stop randomly. What is this right here? Y'all, y'all don't think the market is not algorithmic. What is this right here? Y'all tell me in the comments, what is this? What is that right there? This is a 5-minute time frame. 5-minute time frame. And how do I just know to look back in time to know, okay, we didn't just pause anywhere random. No, we had to target some type of what? Inefficiency in the market. So this is a 5-minute gap way from last week sometime. And look at that. And you think that's random? Do you think that's random? I don't think that's random. This was from last week. Actually, it was from Saturday. And we just trade down to that and boom. You could have, check it out. You could target the sell side liquidity, or you could target the top of the fair value gap. Me personally, I would have been out at the top of the fair value gap. So let's go ahead and extend that. And 50,000 times 2.74%. And you got options as well. Like if you don't want to hold for that long, which is the sell side liquidity right here, you can go ahead and target the top of the gap right there. So you got options on where you can exit the market. And if you're really bold and you're feeling real arrogant, you would target the entire gap to get out the market. But me personally, I like the low hanging fruit. I don't like to play around once I know we done reached to a discount, which we be buyers and discounts. I don't like to play around. I like to go ahead and pay myself. You always want to pay the trader and get out the market. Boom, right there. So there y'all go. So I'm going to leave y'all on that note right there. Hopefully y'all enjoyed this analysis. And again, if y'all brand new, come over here and sign up to the Patreon. This is where I'm teaching these advanced concepts. I'm still continuing to build on it. So for those that are already signed up, I continue to add videos to the beginner lessons. And I definitely appreciate it, man. I appreciate the support. But I'm also giving something back in value. So I'm not withholding nothing. I'm giving it all to y'all in value. And y'all can use these concepts in your own analysis. So definitely come over here and sign up to it if you're interested. And that's going to be it for tonight, y'all. I appreciate y'all time. Y'all stay vigilant. Again, we're ending the quarter. We're ending the first quarter. Tomorrow, Tuesday, we begin the second quarter, and get ready. You know what I'm saying? Get ready for you long-term investors. And that's another thing. I'm catering to long-term investors all the way down to the day trader, like I just showed y'all. I'm doing both. I long-term invest and I also day trade and scalp the market. At the end of the day, it's investing at the end of the day. And we're being we're thinking like the smart money. We're looking at how the market is algorithmic and we understanding smart money concepts. So y'all keep that in mind. I appreciate y'all time. Oh shit. I appreciate y'all time. And I look forward to the next live stream with y'all. I might go live tomorrow. I might go live Tuesday. We'll see. But shout out to y'all. Appreciate it. Peace.